sixth in our Invest Atlanta live series for startups and scale-ups. These sessions are aimed to provide timely and relevant information, and most importantly, inspiration to our tech community during the challenging times that we have now during the COVID-19 pandemic. My name is Nathan Regan. I'm the Senior Vice President for Economic Development at Invest Atlanta. We are Atlanta's economic development agency, and we invest in our people, our communities, and companies that call Atlanta home. Our economic development team supports company attraction, retention, and expansion, as well as technology, creatives, and startup efforts in the city. During the COVID-19 pandemic, we've been really focused on helping all of our small businesses and large businesses and startup ecosystem try and get through this pandemic. And so you can find a lot of our services and a lot of our information on our webpage, which is www.investatlanta.com. During the COVID-19 pandemic, we've been really focused on bringing resources and support to the community of innovators and entrepreneurs in our community. To that end, we've partnered with the startup ecosystem to bring you this info session today, and I'm very, very excited about this one. This is going to be really amazing. Lots of nuggets of information that should be inspirational. And I just want to thank all of our sponsors who support this effort with ideas and connections, and in helping spread the word, including TAG, Metro Chamber, ATDC, ATV, Engage, Venture Atlanta, and many, many more. We go through them every week. And you know, that's when we talk about what the secret sauce is in Atlanta, it's really our ability to collaborate with each other and what makes us different from other cities. So we really appreciate our partners and our sponsors. So now, without further ado, let's get started today with Blake Patton and Joelle Fox of Engage Ventures. They've led startup ventures during uncertain times and have offered to share their story and tips on how entrepreneurs can navigate the COVID waters. We also have today, I'm very excited about this, Joey Womack. He's a founder and now head of WeWork Labs. He will lead the discussion in Q&A and contribute his perspective of just launching WeWork Labs in February, pre-COVID. So we're very interested to see how he's doing. So thank you for joining us again today. And I'm going to turn it over to Blake, Joelle, and Joey. So over to you guys.
Great. So I guess you want me to kick off with introductions?
Sure.
So I'm Blake Patton, managing partner of TechSquare Ventures and Engage. We're an early stage venture firm. We invest out of two funds. One is a traditional early stage fund, and the other is Engage, which is a fund where our limited partners, our investors, and our corporate partners are 11 large companies, you know, AT&T and Chick-fil-A, Cox, Delta, Home Depot, Georgia Power, Georgia Pacific, Goldman Sachs, UPS, ICE, and Invesco. And we invest in companies that line up with their innovation roadmap and help those companies with their go-to-market strategies. And then I guess prior to launching TechSquare Ventures, I spent most of my career doing what I think most of you guys are doing, which is building early stage technology companies. Started with a small company and was acquired by IXL here in Atlanta, which we later took public. And then I went on to run two other venture-backed companies. So I'm excited to be here, and thanks for hosting us, Invest Atlanta.
Yep, and I'm excited to be here as well, and thanks for having me. Quickly on my background, I spent the first 8 years of my career at Price Waterhouse in the audit practice. I left Price Waterhouse to go with a Price Waterhouse client that was a startup, and I was employee number 37 at IXL. Where we were growing rapidly, geographically and revenue. And within a 2-year period, I was hired by the CFO to help run acquisitions and SEC reporting. And in 2 years, we did 40 acquisitions and an IPO. So the very first IPO the very first acquisition that I worked on was Swan Media, which was Blake Patton's company. So I met Blake through IXL and Swan Media and had a lot of fun doing due diligence there. So at that time, we were all about growth and revenue. That company, you know, of course, had funding. Then later, I joined an Atlanta startup that was a small startup that commercialized software out of Emory University. And we were an ATDC company success story. We were unfunded, so we didn't have, we weren't VC backed, so we were bootstrapped. So when we talk about managing through challenging times, when you bootstrap a company, every day is a challenging day. So we'll share some of that with you today.
Awesome, and good morning. I am Joey Womack, the manager here for WeWork Labs, and I'm in the actual beautiful downtown office. I actually connect some of Atlanta's most promising startups to a global network of mentors and investors and similar resources. So let's go ahead and kick this conversation off. But before we do, I'd like to encourage you all to post your questions in chat, and then we'll get to them near the end. Blakey, are you ready?
Ready.
All right, let's do this thing. So let's first talk about, for a second, lesson learned during uncertain times. Both of you all have led companies in terms of economic upheaval. Think back to the 2008 recession. So what are some of those hard lessons learned that you can share with some of the founders today?
Yeah, sure. We, I've lived, I guess, through the dot-com crash, through 9/11, through 2008 and the recession. And, each one's different, and certainly this is very different, right, in scope and duration and level of uncertainty. But I think two things. It's a good question. In fact, the first week of kind of as all this became clear that it was going to be a big impact and it was going to change things, I actually asked myself exactly that. I sat down and thought about what learned from the past and what I thought in the past. And I think the number one thing I would say, the number one lesson is, for me as an entrepreneur, the hardest thing to do was to shift from thinking of all my planning in terms of growth to sustainability. And so, what I sort of told myself that I wish I'd told myself then was, downturns, crises, they require leaders to act and be decisive. And, worst case is you're too conservative. So I think that was probably lesson number one. And lesson number two, on the more optimistic side is, watching each of those crises. There were companies, great companies are built in good times and bad. And there were companies that during those periods, most of the industries, most of the space or whatever sector you're in is going to get, the deck's going to get reshuffled a little bit. And, some of the companies that are the leaders right now are going to be really focused on having to sort of work really hard to tread water and stand still and survive. And it's a time when startups and early stage companies can really close the gap. You're as difficult as this is for everyone. For startups, the equation is more tilted towards the expense side. So you've got a little bit more control, and this is a time to be heads down and prove your products and close that gap, and take advantage of this sort of pause to catch up with those leaders. And so I think the best companies come out of this better positioned because they use this time intentionally. And those were two lessons I reminded myself of at the beginning.
Yes. True.
Yeah, I would say that for sure the hardest lesson is to be realistic and to act swiftly. I think a lot of times as entrepreneurs and even in the velocity days as well, you make decisions and you're vested in those decisions. And we made a couple of decisions that we were all in, and it was on hiring executive level people, and we put a lot of resources that we didn't have a lot of, but we put all our bets on the table for certain resources. And it's so important to set milestones against those, especially when you're spending a lot of money. You have that just, if those milestones don't materialize, what a hard decision, and what decision is that going to be? So I think one of the hardest lessons was always around, when you've made a decision that you're vested in, but it turns out to be wrong. You don't really want to admit that, but you need to, you've got to be realistic, and you have to act swiftly. So if you're managing your cash and you're looking ahead and playing things forward, and you say, we're going to run out of money if we keep doing this. We didn't hit the milestones that we needed to make. So making those hard decisions and making them swiftly, even if it's something that you're really vested in, is one of the hardest things.
Yeah, definitely. Like, let's talk a little bit about team motivation here. What are your thoughts on, motivating team through, uncertain or tough period? Really around staying realistic and quite honestly empathetic.
Yeah. Look, I think for those of you that are leading companies right now, leadership and vision matter now more than ever. This isn't just a crisis. This is a crisis that's sort of impacting people, personally. And so, this is a tough time for not just companies, but the individuals. And so I think, the first thing you have to do as a company is you have to remind everybody of your why. And so you have to get everybody really focused. Hopefully your company has strong core values, and this isn't the first time you're talking about them. But you have to get everyone focused back on why you're doing what you're doing and the company's core values. You have to, in a crisis, right, in hard times, clear alignment around your objectives, around your plans. And so to do that, you have to communicate. And so, just as an example, when this, as this first emerged, part of the way our company operates is we meet, our whole investment team, we meet every Monday as a team in person. And so ahead of the first meeting that we were going to have for the first time, not in person, remotely, I put together sort of 5 guidelines that I wanted our team to think about and remember. And I wanted to sort of be really clear to set the tone for how we were going forward. And I called it What Now and sent it out to the team. And those 5 things were, number 1 was let's remember who we are. And we talked about our core values of service and stewardship and how we were going to use that as the baseline for how we made decisions during all this uncertainty. I talked about, number 2 was let's do our part. And so we talked about the reality that, we were going to have to adjust our plans and shift to working from home. And that the goal was to, not overwhelm the healthcare system. And what that meant for us at that time when it wasn't yet clear, the mandate, there were no mandates to stay at home. The government hadn't yet acted, but like a lot of companies, we went ahead and made that decision. I think that gave our team confidence that we took it seriously and we took their health seriously. But we talked about needing to adjust our plans and do our part. Number 3, we talked about let's focus on our 2020 objectives. Clearly, we didn't envision this back when we did our plan for the year, but this was a reminder to say, look, everything, we're going to have to change a lot of our tactics, but the goals are the same. And so we reviewed the goals. We talked about let's pause, reflect, and improve. And so that was number 4. And so it was a chance to, as you say, be empathetic. And so I shared with the team, look, I get it. You guys are all having to adjust. You're having to figure out how to take care of your kids at home, online schooling, take care of your parents, stock the fridge. So I encouraged everybody to take a few days to do what they needed to do, to help each other. And then we get back at it, right? And so, and then when we got back at it, we talked about using this time. Actually, Joelle, I had shared a story with me that I used that kind of gave me this idea. But we talked about using this time as a gift. And we talked about what we could do with this time to better serve, the startups that we invest in, the entrepreneurs we invest in, and our investors. And then number 5 was we talked about let's communicate. And so obviously as an investment firm, as a venture capital firm, everything we do is relationship based. All of our activities were designed around face-to-face communication. So we talked about we were going to have to, rely heavily on over communicating. And so we talked about the obvious things that are obvious now, but they weren't obvious then, which was, look, we're going to have to use video conferencing. We're going to have to be proactive in all this. And so to this day, throughout this crisis, we continue to remind everybody about those 5 things. And I think that's given our team something to anchor around and some direction when things got confusing. And then the last thing I'd say is, for focus on customers, we put together a packet for our deal leads to say, this is what we think the impact of the crisis is going to be on our startups. We put together a plan and had all of our deal leads reach out to every startup as quickly as we could. And, we basically, and this, I think this advice works for everybody, is we didn't call to just start, there's a natural reaction. Everybody wants to help, and you see the internet flooded with blogs of people wanting to give advice around COVID. And we said, look, we're not going to do any of that. Let's just reach out, let them know we're here and we want to help, and then let's listen. And we did that. And then we took what everybody said and we started to come up with a plan on how to help these companies individually, how to help them as a group. and then how we could use our network. So that's, I think, I think if that all boils down to, vision, core values, and communication.
I love the 5-point plan. I love the mindset around the gift. Joelle, let's talk a little bit on some of the tactics around how company leaders should be thinking about surviving this type of period.
Mm-hmm.
So, for example, could they be revising projections and sales, revenue, things of that nature? What are some of the other questions that company leaders, that founders should be asking themselves?
Mm-hmm. Right, sure. So I think the most important thing that any company needs to be doing right now, and this is something that obviously a bootstrap company we had to do anyway, but I think that you need to really look at yourselves now as a bootstrap company, even if you aren't, because you don't really know when you're going to get your next round of funding. So the first thing the most important thing you can be doing right now is constantly reviewing your cash flow. And as a founder, as an entrepreneur, this may have been something you wanted to delegate in the past, but it's not something you can delegate now. You've really got to roll your sleeves up and get the core team around reviewing your incoming and outgoing cash and your expectations by month. And really, I would recommend doing this on a weekly basis at this point, or possibly a bi-weekly basis. So, just it's as simple as you've got your monthly expectations and where it's coming from, and the team gets together and looks at where are the risks and what are the red flags and what are we going to do, if this doesn't materialize. And another key point here that might be obvious, might not, but just because it's on a spreadsheet doesn't mean it's going to happen, doesn't make it happen. You may have sent the invoices, you may have delivered your products, but that doesn't mean the cash is going to come in when it needs to. So you've got to make those phone calls. This is a good time to be close to your customers anyway, but you need to call and you need to say, hey, did you get the invoice? Is it in your system? Are you going to be able to make that payment in June or July? You don't want to just wait around and then it doesn't show up, because then you've got to start, dialing for dollars at that point. So now you need to be in touch with those inflows. And obviously, I think over the last 8 weeks, you've already done this, but you need to continually reevaluate your burn and what can you push out? What are your largest expenses? Your largest expenses are going to be, your payroll, your consultants, and then probably your rent. So this is a time to, use your skill set of creativity and go in and say, where can we be creative here and what can we push out? Make sure what's coming in, that you've touched it, that it's coming in and when it's coming in. And if not, at least you have the right data, and then prioritize everything, prioritize your decisions really around the data that comes out of that analysis. So again, you've got to be realistic and have a best case and a worst case scenario.
Nice. I do want to say there's some awesome questions in the chat. Please keep them coming as we have 10-ish minutes left. Blake, let's talk about boards. And so this is something I think CEOs, they think about in the back of their head. Some of them is a little bit of the forefront. How should they be dealing with or utilizing their board during this time? I mean, we've seen dynamics where maybe a board can help, they can hurt. So again, how should CEOs be utilizing their board?
Yeah, so great question. So look, this is an answer obviously from an investor, right? On boards. I know it feels different when you're the entrepreneur, but the first thing I'd say is you're going to get a lot of advice from a lot of sources, and at the end of the day, everybody's counting on you to figure out how to take that advice and act on it. So whether your board dynamics are healthy or strained or whatever, they're looking at you to be the leader, and if you're leading and communicating, then they're gonna line up to help you. And just like when there's not a crisis, most of the value of your board doesn't happen in the board meetings. It happens in the one-on-one conversations outside those board meetings. So stay in good communication. Your board has great experience. I joke sometimes and say, to our team and even to our entrepreneurs, you're probably smarter than them, but they've got a lot more data points. They see a lot of companies. They work with a lot of entrepreneurs, so it's worth listening to. And don't be afraid to ask for help. That's at Tech Square Ventures, we have what we try to emphasize with our team is that we say, we want to be the router. And what that means is we want to help with the problems and the opportunities. And that doesn't mean we have the answers, but it does mean we use our network, our corporate partners, and our mentors and our network to help you make those decisions. So I think, look, for sure, work with them to realign the plans that Joelle talked about. Most of the boards I was in, that I'm on, we did different versions of best case, worst case plans, or red, green, yellow scenarios, and we studied, made different contingency plans and what the triggers would be for when we would kick those in. And the board was very active in helping, put those together. So be transparent, leverage that board, and just like the answer before, communicate.
Nice. So before we go to questions from the group, and you all are amazing. Keep on being active, keep on posting. Let's talk about silver linings for a second. Joelle, I'm going to come first to you. Any thoughts on silver linings during this period?
Yeah, absolutely. I think that there's a lot of dry powder out there. There's a lot of VCs raised a lot of money in 2018 and 2019. Blake and I sat in on a Engage webinar yesterday where they talked about how much money VCs had raised. So the money is there. I think that if you've got to do what you can to survive the next several quarters. If you can survive the next several quarters and leverage the relationships you have, this money they will need to be putting this money to work. It's just a matter of when. So I think survival is key. If you can survive and be there, in 3 to 4 quarters, then they're going to be putting the money to work. Nice.
Blake?
Yeah. So look, I think there's a lot. I definitely agree with that. I think that as a whole, just the human part of this has given all of us a pause and a reset and focus on what's important. Look, coming out of any downturn or crisis, I think it was Andy Grove, right? I'm going to hack his quote, but it was something like, bad companies are destroyed by crises. Good companies, survive them, and great companies are improved by them. And so I think, for startups, I look at some of our corporate partners and, how, you look at industries like restaurants and transportation and the level that they've been impacted and, what that loss of revenue means. As startups, we have a little bit more under our control. And this is, like I said, this is a chance to close the gap with incumbents. This is a chance where, innovation is needed more than ever. And so I think the silver lining is that, for probably most of the folks joining on this call, it's kind of your time. Early stage, startups, new businesses specifically are the job creation engine in this country. And so coming out of any sort of crisis, that's what's needed for a rebound. And so, everybody here, what you're doing is more important than it's ever been before.
Nice. I think some of the things that we're seeing is, from a silver lining perspective, is that virtual convenings, either individual or group, are more acceptable. They were always there, but they're now more acceptable. And so I think it opens up opportunities for relationships to be built, not only across state lines, but also globally as well. And so that also kind of goes into the first question we'll take from our viewers. Jake Schaefer is asking, essentially, traditional maybe investors and maybe corporate partners maybe used in-person meetings to really size up entrepreneurs or founders. And so you can't do that now. So how are you seeing investors evaluating founders?
Yeah, I don't think we know yet, right? I mean, look, there's so much uncertainty, and I think we're all trying to figure it out. I think what you've probably seen is that the investors have first focused on the companies in their portfolio. Those are the entrepreneurs that we've already made commitments to, and they deserved all our time and attention and capital to focus on at first, figuring out what they need. And so we're just kind of now having to answer that. We're just getting back to the pipeline. And I think right now we're still in the part of the pipeline that started before this. So most of the pipeline we've had some face-to-face interaction. But look, I think when the most important thing we're investing in when we invest in these companies is the people. And so that getting to know them is really important. So I think we're going to have to get comfortable with that. But I think what it's going to mean is that, warm introductions are super important. I think it's going to mean that we're going to rely on kind of the ecosystem to help us validate the assumptions we're making through the video chat. But, if you think about when we're evaluating entrepreneurs, we're trying to understand certainly, their vision and their ability to succeed. And so those we can do remotely pretty well. It's that character part that's hard, right? And getting to assess the character. And so I think, I would encourage entrepreneurs to use their network to make sure they get warm introductions, help me figure out how to remotely get comfortable, with you. But look, I think, like you said, silver lining, I think we're going to get more and more used to that.
Joel, your thoughts?
I think that I totally agree with all of that. And I think using your ecosystem now, I mean, the Atlanta ecosystem here, incubators, accelerators, your attorneys, any of your partners. The other thing that I think you can use this time for, which is one of the things that really we wanted to do more of at Velocity, was to develop and strengthen potential strategic partnerships. So we did have a strategic partner, and if you at this time of getting creative, thinking about potential strategic partners that may be able to provide some funding for you. So if you're in survival mode and you have to do certain things, and one of the things that Velocity did was our strategic partner needed some development that we were able to do, and we needed funding. So we were able to work a deal where we received an upfront payment that helped us, bridge a gap over several months. We did some development work for them, didn't give up any IP, or, we were still able to compete. So you still have to make the right decisions and don't give up anything, play it forward. But, really look to some of your strategic partners as well. And they may be able to help bridge the gap. And, you just need to decide, you're probably gonna have to give up something. What is it? Is it some time? Well, right now you may have a little extra time. So I think just using your current network and strengthening your relationships with partners, either investors or potential strategic partners.
Nice. We're going to take one more question. This one is from Rejoice Jones, talking about or asking around new emerging markets that may come from this situation. So, she's saying that, in her opinion, COVID-19 will create and edify the gig economy in ways we haven't seen before. So what are you all's thoughts on any potential new markets that may come out of this situation?
Yeah, look, that's such a good question. And I think everybody that thinks like that is going to is going to find their way and do well. And we have this unique vantage point because we're seeing what the entrepreneurs are focused on. And then we have our corporate partners through Engage. And so we get to work with them on their innovation roadmaps, and we get to see what they're thinking, and both short term and long term. And so we're early in this, and so it's a little early to really totally answer that question. But if there's one thing I think that is common across all industries, and what I'm hearing, and where I think that just a ton of innovation is going to happen, is everything supply chain. So it's been very obvious, no matter the industry, healthcare, whatever, that the supply chain, the sort of focus of the past 20 years of cost, optimizing entirely around cost. And now we're seeing what happens, right, if you don't balance that with a focus on resiliency. So I think a ton of innovation is going to come in, rapid manufacturing and supply chain technologies, but also, that's a really great opportunity for us as a country and for Georgia as a state, because this is also going to bring together somewhat more than we have in the past, this opportunity around the tech community and the manufacturing community. So I'm excited about that. You've got Georgia Tech strengths. We just have a lot going on here around the supply chain. And then, I think, look, we've only got a few minutes, so I can't do this. But when I talk to everything from our entrepreneurs to our corporate partners, I was on the phone yesterday with some of the executives from Chick-fil-A, and he was telling me how they're starting to think about what does that what does this mean for them going forward, and what's going to change? What needs to change certainly in the interim, but what are some of these long-term consumer behaviors, and what are the innovation opportunities? So yeah, I think this is a great time for entrepreneurs. I would encourage you though, in venture, as an investor, when we write a check, we're trying to write a check on something that has an inflection point a couple years out, 2 or 3 years out. So you have to also make sure you're not just focusing on what the needs are for tomorrow if you're going to build a company around it. You might be able to fill a short-term need, but I keep hearing that phrase "new normal," and this is not normal, and it's not the new normal. We're not there yet. I don't know what it is, but it's not this. And so you have to think about what are those changes going to be long term, and there's a lot of them. She mentioned it with gig economy, employment issues. Right, we're all probably going to be working from home more. I've watched my 12-year-old and 9-year-old have two very different experiences trying to figure out online education. So a 6th grader and a 3rd grader have very different needs, but the teachers, the schools have done an incredible job in a couple of weeks, making progress. So yeah, lots of opportunity.
Nice. Joel, any thoughts? Or still there?
She might have froze up.
Yeah. So actually, we're going to say one more question. So if you have a few more minutes, Milton Walker is kind of going back to that first question you asked, or sorry, the first question you answered, Blake, around the 5-point plan you gave when things kind of first broke out. So he's asking around, is that also company culture, right? So you think the company culture or the culture has changed, or it needs to change coming through a crisis like this current pandemic?
Yeah, it's a good question. So in some ways, Tech Square Ventures is a startup too. And, our team has doubled in size in the past year. And so I think that, our culture is still being built. But yeah, I think that's true. I think we fell back. I think our core values of service and stewardship, I think anyone that joins our company knows that that's what they're signing up for. And if they don't, then they're not going to be a good fit. And so I think we had a really strong base. So yes, I think that's the case. In terms of what needs to change about our culture, as a leader, honestly, I've grown some through this as well. It has forced me to trust the team to run things a lot more without my involvement. And I think probably all of you that are running companies are having to figure that out as well. So as a culture, I think, trusting each other, and, we'll continue to build on that. But look, I think we were a good team before, and we're, transparent, and we're having to adjust. But I think that if as a startup, hopefully you went into this with some of that, and certainly your core values. I think the core values is the most important part. And if those are genuine, and people see consistency in the decisions that you're making with those core values, then you'll build a strong culture. I think the core values are what really drives the culture.
Nice. And thank you for admitting you're still growing as well as leading. I think you froze up for a quick second, but I want to kind of leave you with the last words. Any closing thoughts before we hand it back over to Amy?
I don't know what that. I think that we covered most everything. I think forging relationships, strengthening your relationships, and using this time to really evaluate where you are, what things do you need to purge, and what things can be accelerated. I think just trying to, sometimes when you're in a startup and the way things were, we didn't really have the time to sit back and think about some of the things or develop some of the relationships that we wanted to do, but now is the time to really take and consider those things.
Awesome. Thank you. So I hand it back over to Amy Love from Invest Atlanta for our closing thoughts.
Thanks.
Thank you all so much. Blake, Joelle, Joey, fantastic lineup. Such genuine feedback, and really shows what great leaders you all are. And I feel super inspired. So thank you for being with us today. This session was recorded. We will be posting that on our, it will remain on the Invest Atlanta Facebook page. We will send it around in an email. It will be on our YouTube page as well for those of you who want to share. If you have know startup founders or have friends that you would like to share this with who couldn't join us live today. And again, thank you. This is a partnership effort. We appreciate our partners, Technology Association of Georgia, Metro Atlanta Chamber, the ATDC, Atlanta Tech Village, Tech Square Ventures, WeWork Labs, Venture Atlanta. We also have Silicon Valley Bank, Atlanta CEO Council, GeorgiaALIVE, Lab 1886, Independent Bankers Association of America, and I hope I didn't forget anyone. I think Overline VC, Mailchimp, Women's Entrepreneurship Initiative. So someone commented on the chat or on the live session today about the fantastic Atlanta ecosystem, and I think that we're seeing how great it really is as we pull together these live sessions. We look forward to seeing you next week on the 14th. At 10:30, we will have a session on legal awareness for startups. So just queuing that one up for you, and we look forward to seeing you then. Thanks for joining us. Stay well.